guys, Eddie with Lux Realty here, interviewing Rebecca Carr with Mac Mortgage. As you know, here at Lux Realty, we like to work hand in hand with solution-driven, like-minded professionals. We're passionate about educating ourselves and our clients, ensuring they are making secure financial decisions. Rebecca Carr is a certified mortgage planning specialist who has been working in the mortgage industry since 2002. She has experienced firsthand changes in the financial and real estate market and has helped hundreds of families each year obtain the American dream of homeownership. Rebecca, we often encounter clients that are fearful of jumping into the housing market due to rumors that the housing bubble is going to burst. What's your take on the current market?
Well, Eddie, where it's true that most economists do expect the housing market to slow, that doesn't equate to a dramatic decrease in home prices or a bubble bursting. Where we did see a slight slow in prices at the end of 2018, that was due to a normal seasonal slowing and then slightly exaggerated by the fact that interest rates were at a 9-year high.
Well, can you elaborate further on that?
Well, when interest rates go up, the housing market tends to go down, which all ties in to affordability. In order for a buyer to be able to keep the same payment and qualify with a higher interest rate, the price has to go down. But bottom line, the consumer still has the same monthly payment. The biggest factor that determines if a potential buyer is going to purchase is, can they afford the monthly payment? Fortunately, the economy in Colorado is thriving. The unemployment rate is at 2.8%. When the job market is flourishing, people can qualify for loans and afford a monthly mortgage payment, keeping the housing market stable.
Wow. So what's your take on the current home values and affordability?
It is true that we have seen historic increases in the real estate market over the last few years, but the market can't continue to appreciate at such a quick rate. Most economists are projecting that appreciation will slow to a healthier level between 3 and 5% nationwide. Here are some staggering numbers to consider. The average homeowner stays in a property for 5 years. The average home price in Colorado is $372,000. The national appreciation is around 3.6% each year. So in 5 years, you'll obtain approximately $71,957 in equity.
Wow.
This is a way better return on your investment versus throwing rent down the drain for even one more year.
Right.
The average rent in the Denver metro area is $1,600. So in 1 year, you've thrown away over $19,000. In over 5 years, that equates to $96,000.
Ouch.
Most of us can't escape the fact that we are going to have to pay monthly to keep a roof over our head. So why not make an investment in your future instead of throwing all that money away?
That makes perfect sense, Rebecca. We know that you not only originate loans, but you also invest in the real estate market. I know we've discussed before that you've purchased a home in one of the worst times you can buy. Can you please share your experience with us?
Absolutely. So before the market really changed and we could kind of start to see signs, but weren't 100% sure yet, I decided to purchase a home in 2007, December of 2007, so really right before the crash. When I purchased the house, it was $464,000. And, you know, I wrote it out. I did check a couple times to see, well, maybe we should sell, or, you know, the economy was bad, so times were tough. Unfortunately, or fortunately, I wasn't able to sell at the time. I just was underwater. But we stuck it out, and now we still own the home, and the house is now worth $735,000.
Wow, so it definitely pays to stick it out.
Write it out.
So what do you conclude from this, Rebecca?
So in conclusion, there will always be ups and downs in the housing market. But as long as you're an educated consumer and make sure that you're not overextended through a slowdown, you will always see the market return to a gain. Real estate will continue to be one of the best investments you can make.
To all our viewers, we hope you find value from this information. And as always, we're here to help. Thank you.
Thanks.